better place. We are smart at what we do to make our world a better place. By the help of God, to make our world a better place. By the help of God, to make our world a better place. Smart do.
Hello students, I hope you are all fine. Today I want to take you through money and banking. This is very interesting. Money is all the things we need and it must be stored somewhere. So there is a system. Before we go to anything that is money, I want us to start with barter trade. Barter trade is just a system of a trade whereby goods were exchanged for goods. For example, if I give you my pen, you will give me your book. Then we have exchange. That is what we call barter trade. So barter trade satisfied human wants. It's also created the surplus. Barter trade also forged good relationship between people. Barter trade also enabled some communities in the past to be specialized in producing some types of commodities. We also have another importance of barter trade, which is it improved the living standard of the people involved, because definitely there was something like a trade. Inasmuch as barter trade was very useful and had some advantages, it also had some limitations, which include lack of double coincidence of wants. For example, you could not get whatever you want in the market after taking your good all the way to the same market. We also have indivisibility of some commodities. Indivisibility of some commodities. We also had lack of standard measure of payment. For example, I can bring my cow and you have maize. So we don't know how to value that. How many tins or kgs of maize is supposed to be equivalent to one bull or one cow. Then after that, human beings developed what we call money, something that we use up to today. So that one brings us to money system. Money system. In money system, goods and services are exchanged for money, and not like the previous where we used to change them for other goods and other services. So in the money system, we're going to see what characteristic that something must possess for it to be called money. First, by definition, money simply can be defined as anything that can be accepted as a medium of exchange. Characteristics of money must include acceptability, durability, divisibility, cognizability, homogeneity, liquidity, transfer of movable assets. And we must know some of the functions of money. One function of money include it acts as a medium of exchange. Another one is money is a store of value. Another one is money is a measure of value. And another one, it can be used to transfer immovable assets. We have demand for money. Demand for money simply means the motives. Demand for money. The motives that leads people to hold money. We have three motives. First motive is transactional motive. Transactional motive, which is basically people need money to carry out transactions in their daily life. Like for example, I need to go out there to board a matatu. I have to pay some money. That is what we refer to as transactional motive. Second is precautionary motive. Precautionary motive. Which include holding money or putting some money somewhere for the purposes of, suppose I get sick, suppose I get this, I'll be able to use this money. You are precautions against any happening that may be in the future, which is invisible. And then lastly, we have speculative motive. Speculative motive. In this, people hold money for the purposes of speculating whether the price of certain asset will increase or decrease. This all depends on amount of money or amount of wealth that somebody has. For example, you've heard that there will be another bypass that will be passing somewhere. So you rush there to buy land so that when the bypass finally passes, your land will appreciate and you will be able to recoup. Let's see something else on the supply of money. Supply of money depends on the government. It's the government that supplies the money. So in supply of money, it all depends on government policy and policies of the commercial banks. It also the increase of net income that will determine how much money that will be available in the system. Let's see what we call banking and bank. What is a bank? Bank is a financial institution that accepts deposits. And what is banking? Banking is the process of accepting these deposits. And what are the accounts, types of accounts that can be held by a person? One, we have current account. Second, we have a savings account. And third, we have fixed deposit accounts. What are some of the functions of a commercial bank? A commercial bank accepts deposits. It provides a safe means of transfer of payments or payment. It facilitates foreign exchange payment. It also enables us to transfer money from one account to the other. And lastly, credit creation. Then let's see what the central bank does. The central bank has got so many activities to provide to the commercial bank. For example, it is a banker to all the commercial banks. So one, it issues the currency. Secondly, it is a banker of commercial banks. It also advises the government on financial matters. It facilitates the clearing of checks. And lastly, it controls the money system using the following measures: bank rates, open market operation, which we call OMO, liquid ratio, selective credit regulation, and lastly, directives. We have several trends in banking, which include ATM, use of automated teller machines, We also have networking of all the branches. And another one is mobile banking. Nowadays, you can just receive money from your bank in your mobile phone. And another one is e-banking, which we call electronic banking, where you can just transfer money from one bank account to the other one using your phone. And lastly, different products that they provide to their customers. I hope you enjoyed the lesson, and thank you.